complex mortgage world, finding the right direction can be challenging. That's where Lighthouse Advisors comes in. With over 25 years of experience, we provide fractional leadership and executive oversight, guiding companies through transitions, growth, and innovation. From IMBs to brokers to credit unions to tech firms, our team of seasoned professionals is here to shine a light on solutions, ensuring your business thrives in every environment. At Lighthouse Advisors, we don't just guide, we empower. Together, let's create a ripple of success across the industry. Email us today at laura@lighthouseadvisors.com. Thank you for joining us today for another episode of Illuminating Solutions, the podcast where we shine a light on the challenges and opportunities facing the mortgage industry today, and we offer real solutions that will help you grow and thrive. I'm your host, Laura Brandeo, the CEO of Lighthouse Advisors, and today we are joined by the incredible Leora Ruzin. She is a seasoned mortgage executive and a capital markets expert at Lighthouse Advisors. Leora, thank you so much for joining us.
Thank you for having me. Super excited to be here and be a part of the team.
Fabulous. Well, we're going to jump right in.
Yeah.
Okay.
Let's do it.
So as more lenders consider expanding into the correspondent space, what are the essential factors that they need to evaluate before making this shift? And how does your consulting services help lenders develop all of these? You got policies, you got investors. Who am I working with? What do I secure in terms of financial backing? There's so many questions. Where does your expertise come in order to be able to help them?
So the first question lenders have to ask themselves is if they're deciding to make this transition, the biggest reason, the biggest question you have to ask yourself is why? What is your purpose for wanting to make a transition from delivering loans to the wholesale space to delivering loans in a correspondent space? And a lot of times the why is it could be a different reason. It could be, well, I want more volume. I want to get more units. It could be there's specific loan products I want access to, and those products might have better pricing on the correspondent side. I want to have more control over the loan transaction process. And so you have to sit down as a lender and figure out what that why is. And then you do a basic cost analysis approach on the why. So if I make this transition, what do I expect to pick up? Whether it's, I'm picking up efficiencies, I'm picking up new products. I'm getting a better, basis point net revenue on every loan. I'm able to decrease compliance costs because I'm now doing it in-house. So there's all those questions you have to ask yourself. And so when you've decided what your why is and what you're hoping to gain out of this process, then it's exactly what you said. The first step really is doing a complete gap analysis of your current loan process and identify what gaps you have in order to be able to deliver on the correspondent side. A lot of times when you're delivering into the wholesale space, you don't have to worry about issuing disclosures. So when you make that transition, what does that look like? Does your loan origination system support issuing disclosures? Do you have it set up electronically? Do you have the policies and procedures in place to make sure you're satisfying the TRID requirements? So these are all the questions you have to ask once you decide that you're going to make that transition. And then from that, okay, who do I want to partner with from an investor perspective? And I know that I'm going to want to walk before I run. So there's two different ways you can deliver loans in the correspondent space. You either have non-delegated, where you're not underwriting the loan, and then you have delegated, where you're underwriting the loan in-house, and then you rep and warrant that the underwrite is accurate. And so I always tell my clients, don't just go right out the gate and go delegated, because you need to get your feet wet on the correspondent process and understanding the risk that you take on by going correspondent, and make sure that you have all of those processes in place before you decide to go full delegated and you're hiring a bunch of underwriters, which can be expensive. You have to make sure those underwriters have the right delegation levels depending on how you want to deliver those loans, conventional FHA, VA. And then another piece to this is, well, I don't have the capital to fund these loans myself, so I got to go find a warehouse line. maybe two. I always recommend two, because anyone who's been in the business a long time knows sometimes warehouse lenders decide to shut down and they don't give you a lot of notice. So it's just like it's good to have multiple investors in your quiver. Same with warehouse lenders. And so those are the kinds of solutions that I provide to clients when they decide to make this transition is we sit down and do that gap analysis, we identify the why, and then we go through a timed approach on how to make that transition.
I love that. And thank you for being so detailed, right? Because
That's who I am.
Yeah, it's something that it do not jump into it lightly. And what you started with of what's the why? I'm going to tell you, it's funny, we work with a lot of warehouse banks because we do transition people from the broker channel into correspondent or adding correspondent to what they do. And
Right.
we have these relationships at Lighthouse with these warehouse banks, and they say to me all the time, the first question I ask is, why do you want to do this? Just what you said. And every single one of them said, and the answer should not be, oh, because you can make more money, right?
Right. Right.
That's that. Yes. Listen, we all hope that we certainly are all in business and that is our ultimate goal of profitability, but we shouldn't start initiatives like that just with the thought of that is the outcome, because there's a lot that goes into it. And that's why, hiring Leora at Lighthouse Advisors to be able to explain all of this to you, you are better prepared so that way, ultimately, that will be the result. So thank you.
And that's perfect because that kind of segues into our second question.
Exactly. So let's go right in. So next question. So you do certainly have deep expertise in guiding lenders through the seller servicer application process. What are some of the most common pitfalls that lenders face during that process? And how do you help them avoid some of those to have a smooth and successful approach with agencies like Fannie Mae, Freddie Mac, FHA, VA?
So it's interesting, a lot of lenders who want to get into that space, and it's just like going through that same process of deciding whether you want to go from wholesale to correspondent. Why do you want to deliver direct to the agencies? What are you hoping to gain from making that transition? Because that is a huge process. Getting approved with Fannie and Freddie is not easy. It is not quick. And oftentimes, I've never, I'm not, if there's anyone out there who's successfully submitted a Fannie Mae application and didn't get any questions back, let me know because it's never happened for me. I've gotten really good at, nailing it down to just a few things. But what I tell my clients is the devil is in the details. So your Fannie Mae application and Freddie Mac application, they are going to ask very specific and succinct questions about your business. And what they are doing is they are assessing your risk. What kind of risk is Fannie or Freddie going to take on by giving you the option to direct seller or direct servicer? And so they're going to ask you, how long have you been in business? Do you have experience delivering correspondent? Do you have experience underwriting your own loans? And so each agency, they do have different requirements, right? They have different net worth requirements, but they both want to see an established mortgage company who has experience in underwriting and in quality control. And so, excuse me. So the list itself is pretty simple. These are the policies and procedures we need. This is the documentation we need. And so that's what I do. I go through every single question with a fine-tooth comb with the lender to let them know, okay, let's look at your policies and procedures. And if it doesn't specifically speak to different pieces of the seller guides for Fannie and Freddie, they're going to get kicked back. And then they're looking at, those investor relationships. They want to look at investor scorecards. What's like your loan quality? What's your repurchase risk, right? How many times have you had to buy back a loan? How many times have you had to pay early payoff fees because your borrowers are paying loans off too soon? And so they're really getting into the meat and potatoes of your business. And then once you get approved, you kind of have to go through that same process every year, right? You have to go through a renewal process. They're going to ask for financials on a consistent basis to make sure that you are still profitable and solvent. and that you're a good, sound customer for them. What's great about delivering to the agencies, though, is you do get so much efficiency pickup. It's not just a price play; it really is an efficiency pickup, and you can do it kind of a la carte, which is kind of nice. You can deliver through the cash window. You can deliver in bulk. You can sell directly to the agencies and simultaneously sell servicing to another investor. It's called co-issue. So there's all these different ways that you can put that the sausage is made. And so it's really exciting. But again, there's a lot of risk. Buying back a Fannie Mae loan is not a lot of fun. So it's, again, just like making the switch from wholesale to correspondent. It's not something that you should take lightly. And it's not something that's really quick. I tell customers that it could take between 6 months to a year to get those approvals if all the ducks are in a row. So those are things that you just need to keep in mind when you decide to go down that path. Government is a little bit different. You're not really getting approval to sell. You're getting approval to, issue the FHA, guarantee or the VA guarantee. And so those have different requirements. But again, it is all tying back to the documentation, the policies and procedures.
Yeah. And as you're speaking, I'm literally hearing in my brain hospital lines and scratch and dent and, brokers that how to, these are
Oh,
things
yeah.
that you wouldn't even know those things when you're first starting out. You wouldn't even know those blind spots because you haven't
Right.
gone through that. And that is the reason why you need an expert like Leora to come in and be able to guide you through all of that. That, yes, the application process, I have a feeling that she kind of has learned through her experience of this isn't going to fly, or
Right.
this is what they're looking for, and we
Exactly.
need to ensure that we have that in place. So she is there to guide you, kind of like, when we're applying to colleges, right? When kids are applying to colleges and you have that coach of, if you're trying to go to Harvard, you better make sure that your application says this, right?
Exactly.
So that's what
That's
Leora
so funny.
does.
I'm literally going through this with my son right now. He's finishing his junior year. We're already starting to talk about, well, you need to have this on your resume if you
Right.
want to get into these certain colleges. It's the exact same. If you want an approval with, an investor or with the agencies direct, there's very specific things that they are looking for.
Yes, yes.
Mhm.
And that's why having that expertise is so important, right? Because
Definitely.
it is a lengthy process and it does require a lot of due diligence, and having an expert on your side for the project makes it so much easier.
And one key thing to add to that real quick is if you do go through that process and you miss something that's critical and you don't get approved, which can happen, you have to wait to reapply. And each agency has a different requirement for how long you have to wait to reapply. And then when you reapply, you're kind of on their, red flag list is maybe it's more of a brown flag. I don't know.
Yeah.
Not quite a red flag, but not a green flag. It's not going to be like an easy pass. They're going to be looking at your application a little more closely because you had already been previously denied.
Yeah, very
Things
good
to keep
know.
in mind.
Very
Yes.
good to know. That's a great tip. Okay, so we're going to wrap up with our last question. And we spoke about how Leora is a capital markets expert. So next question is, moving from best efforts to mandatory delivery is a critical decision for many lenders. Can you walk us through the key steps a lender needs to take to ensure the transition maximizes profitability without compromising efficiency or compliance? And how do you support them in making sure that they avoid the risk of that word that you mentioned before, a loan repurchase?
Sure. And not just a loan repurchase, having to sell a loan at a loss, right?
Yeah.
And so one of the biggest reasons why lenders make the transition from best efforts to mandatory is you do get better pricing on mandatory executions with the investors, and then also direct with Fannie and Freddie. But that's not the only reason why you would want to go from best efforts to mandatory delivery. And so again, I always start this question that they ask me with why? Why do you want to make this transition from best efforts to mandatory? And if they tell me, well, we want to make better pricing, we want the benefit of a variety of different execution types. It gives us the ability to underwrite to one set of guidelines, and then that opens us up to faster closing speed. So there's a variety of different reasons why you would make this transition from best efforts to mandatory. And if you're a Fannie Mae seller servicer, so like, again, this is kind of an organic transition for a mortgage company, right? Wholesale, correspondent, direct seller, servicer, and now we're going to open it up to mandatory execution. When you're Fannie Freddie seller servicer, it just makes sense to be hedging your pipeline and to be delivering into a mandatory execution of some kind. And so the next question I ask them is, how much are you doing per month in volume? Because there really is a benchmark. You know, there's different schools of thought, but I've always looked at the absolute minimum, you need to be generating 6 million a month in loan origination volume that can be sold on the secondary market. And so if they're not meeting that, the cost of setting up a hedge program and making that transition does not is going to be more than the benefit of making the extra bips on the mandatory execution. And so once we've established, okay, you guys are making enough in volume, it would make sense to at least start that conversation. One of the biggest things I've seen that people goof up when they make this transition is they're not getting the data right. And so anyone who's in secondary and capital markets will tell you they live and die by the accuracy of their pipelines. Yeah. And if they are not accurate, then they are not hedging properly. They might be short, or they might be long. They might be under hedged or over hedged based on what they're seeing in the pipeline. And I'm not just talking about the loan particulars, right? That's very important, but it's also important to know where your loans are in the life cycle, because the propensity of a loan to close at underwriting approved is much higher than if it's in an application stage. And if those stages aren't accurate, or if they are not moving through the process in a usual fashion, because we all know, we should be tracking how long it takes for loans to get from one, step of the process to the next. And if it's not accurate, then I'm going to assume, well, this loan should close in 30 days, so that I'm going to take out a forward commitment with, a 30-day delivery. Oh no. Something happened. It's stuck in underwriting, or there's something wrong with the appraisal, or the borrower's ghosted us and we can't, there's so many different things that can cause a delay in a loan closing. And so I spend a lot of time with my clients making sure that the data in their loan origination system is not only accurate, but that it's getting pushed over into their hedge model, or wherever they are keeping an eye on their hedge position and their pricing. Because if those aren't accurate and they're not seamless and they're not happening in real time, then I can't make the decisions I need to make to manage my hedge. And so that is a really big piece of it. Then the other piece of it is just making sure that you have sound policies in place for your lock desk and for your loan officers. If you don't have a lock policy, or if you have one that's very vague and is not transparent as to what you are allowed and not allowed to do with your rate locks, you're just opening yourself up for huge risk, not just rate risk, but all other kinds of risk, right? And as a loan officer, not knowing, you need to know the particulars of the loan to know if it even should be going into the hedge. And that's another thing I talk to clients about. If you do a lot of loans in this product, then yes, maybe hedging them would help you pick up some efficiencies in pricing. But if only 15% of your loans are FHA or VA, doesn't really make a lot of sense to hedge with those into best efforts. And so I go through that process with them of determining, based on your business, your volume, and your product mix, that it makes sense to hedge. And these are the products you should hedge. These are the products that you should not, and just continue to deliver into a best efforts environment.
Yeah, and
there's so much more to it than that.
But everything that you just said, I mean, and all on point, and I agree 1,000% with you. And the biggest thing that Leora said in all of that, which was great information, it's unique to you. Every single company is going to be different. So everything that Leora said is, I will sit down with you. I will take a look at this. I will ask the questions. I will review the data. I will ensure we come up with a plan that we all agree with, and give you the best advice to be able to maximize what you're looking to ultimately achieve, right? And that's the message. There is no, here's a playbook, just follow this playbook. It doesn't work like that, right? It is specific to the business you're running. So that's another reason where Lighthouse comes in. That's why we can set up that time and that project to be able to provide that oversight, set you up. And then listen, if you're okay on your own at that point, that's wonderful. If you want Leora to hang around and, monitor it, on a monthly basis, a certain amount of time to come in and give her evaluation, 100% we can do that too. So it really is customized for what works best for you. And that's the beauty of it. But, for some people that are hearing this, they might go, I didn't even understand half the things that you just said. And that's okay. There is nothing wrong with that, right? There is nothing wrong with that, because the good news is you don't have to. She does. She knows. And so that is the whole purpose. Well, Leora, thank you so much for running through Correspondent, running through getting our approvals, running through best effort to mandatory. These are all so vital to the growth of our organizations. And for everyone out there, don't go crazy thinking, oh my goodness, how am I ever going to get through this? Or do I have to go out and hire a permanent person that's going to be on my payroll? I don't know if I could afford that, to have that level of person. Leora can come in. She can be that expert. You are getting someone that maybe at the size your company is, you wouldn't be able to put on the staff, but that's what Lighthouse is here for. We can help you. Let us shine the way and use our expertise to be able to take you to the next level. For everyone out there, you have a project like this, email discovery@lighthouseadvisors.com, ask for Leora, and let's get her in there to help you. Thank you so much, Leora.
Thank you.